For decades, Google has been globally recognized as the undisputed monarch of Internet search, an advertising behemoth, and the architect of Android. Its core identity seemed immutable. Yet, beneath this familiar surface, a profound transformation has been underway, largely out of public sight. This investigation delves into the strategic maneuvers and audacious ventures that have systematically reshaped Google's identity, pushing it into domains few anticipated. We will uncover how the company quietly expanded its reach into biotech, autonomous vehicles, urban development, and even direct hardware manufacturing, often with staggering investments and equally significant risks. This isn't just about diversification, it's about a complete re-evaluation of what a tech giant can, and indeed, must be. The most significant, albeit corporate, pivot occurred in 2015 with the creation of Alphabet Incorporated. This radical restructuring saw Google become merely one of many subsidiaries under a new holding company. Larry Page, then Google CEO, stated the change was to make our many efforts more transparent and accountable. The move separated Google's core, highly profitable Internet services from its more speculative, high-risk other bets. This organizational shift was designed to empower individual ventures with more autonomy, attract specialized talent, and provide clearer financial reporting to investors who had long voiced concerns about the opaqueness of Google's diverse projects. It was a structural transformation with profound implications for everything that followed. Analysts at Bloomberg reported that a key driver for the Alphabet restructuring was the need to provide greater financial clarity. Before 2015, the financial performance of ambitious projects like Waymo or Calico was largely obscured within Google's monolithic earnings reports. This made it difficult for investors to assess the profitability of the core business versus the burn rate of nascent ventures. Post-restructuring, Alphabet began reporting Google and other bets separately. In Q4 2015, this revealed other bets recorded a $3.6 billion operating loss for the year, confirming investor suspicions about their significant capital expenditure. The move aimed to reassure shareholders that the core advertising business remained robust, while also giving moonshots the runway they needed without constant scrutiny. Perhaps the most audacious and least anticipated venture was Google's deep dive into biotechnology with the establishment of Calico LLC in 2013, prior to the Alphabet shift. Calico, an acronym for California Life Company, was founded with a singular, profound mission to tackle aging and associated diseases. This move baffled many industry observers, as it represented a complete departure from Google's Internet-centric origins. Initial reports from Time magazine highlighted Dr. Arthur Levinson, former Genentech CEO, as Calico's CEO, signaling serious intent. The project received substantial initial funding, rumored to be in the hundreds of millions, underscoring Google's long-term commitment to a field with notoriously protracted research cycles and high failure rates. Calico's ambition is less about finding a miracle cure for aging in the immediate future, and more about understanding its fundamental biological mechanisms. According to a 2015 Nature article, Calico's researchers were focusing on genetics, metabolism, and neurodegeneration, collaborating with academic institutions and pharmaceutical companies. One notable partnership was with AbbVie, a leading biopharmaceutical company, which committed up to $1.5 billion in funding to Calico, sharing research and development costs. This collaboration was designed to accelerate the discovery, development, and commercialization of new therapies for age-related diseases. Such a substantial commitment from a pharmaceutical giant validated the scientific seriousness of Google's initial foray into the notoriously complex world of life sciences. Following Calico's establishment, Alphabet expanded its life sciences portfolio with Verily Life Sciences, founded in 2015. While Calico targets the fundamental biology of aging, Verily focuses on applying technology to solve practical healthcare challenges. Its projects include smart contact lenses for glucose monitoring, surgical robots, and precision medicine platforms. Forbes highlighted Verily's more immediate, data-driven approach, leveraging Google's expertise in AI and data analytics for clinical research and personalized health. This dual strategy, with Calico pursuing long-term foundational science and Verily tackling nearer-term applications, demonstrates a comprehensive and multifaceted commitment to health, far beyond the initial scope expected of an internet company. Another dramatic shift has been Google's aggressive push into first-party hardware, moving beyond its traditional role as an Android platform provider. While previous efforts like Nexus devices were collaborations, the launch of the Pixel smartphone line in 2016 signaled a new resolve. A Wired article noted that Google aimed to control the whole widget, much like Apple. This strategic move allowed Google to deeply integrate its software, particularly its burgeoning AI capabilities, directly into the hardware experience. It was a direct challenge to its own Android partners like Samsung and LG, indicating a willingness to compete fiercely in the consumer electronics market to control the end-to-end user experience and showcase its technological vision. The Pixel line's unique selling proposition wasn't just raw specifications, but rather Google's computational photography and AI-first approach. Reviews from CNET often praised the Pixel's camera, attributing its performance to sophisticated software algorithms rather than just sensor size. This emphasis on AI-driven features, such as call screen and magic eraser, demonstrated Google's vision for ambient computing, where intelligence is seamlessly integrated into daily life. This was Google's answer to Apple's tight ecosystem, offering a competing vision that placed AI at the core of the user experience. The pivot into hardware, therefore, was less about selling devices and more about defining the future of ubiquitous AI. Google's hardware ambitions extend far beyond smartphones. The acquisition of Nest Labs for $3.2 billion in 2014 brought smart home devices into Google's ecosystem, followed by the contentious acquisition of Fitbit for $2.1 billion in 2021. The Wall Street Journal reported that the Fitbit deal faced significant antitrust scrutiny in Europe, highlighting Google's growing influence in health data. These acquisitions solidified Google's position in smart home devices, wearables, and health tracking, providing vast streams of user data. This strategy is about building an integrated ecosystem where every device, from thermostat to smartwatch, is powered by Google's AI, collecting data, and serving as a gateway to its services. One of Google's longest-running and most expensive other bets is Waymo, its autonomous driving division. Initiated as the Google self-driving car project in 2009, Waymo officially became an Alphabet subsidiary in 2016. The New York Times documented its pioneering efforts, often being the first to test fully autonomous vehicles on public roads. This was not merely an incremental improvement on existing automotive technology, it was a fundamental reimagining of transportation. Waymo's approach, focusing on Level 4 and Level 5 autonomy from the outset, demonstrated Google's commitment to solving the problem entirely, rather than just assisting human drivers. This required immense capital investment in R&D, specialized hardware, and extensive testing. Waymo's ambition is backed by staggering operational scale. As of early 2023, Waymo reported having driven over 20 million miles on public roads and billions more in simulation. According to their safety reports, these miles have been driven with a significantly lower rate of collision involvement compared to human-driven vehicles. They have launched commercial robotaxi services in Phoenix and San Francisco, offering ride-hailing without a human safety driver. This represents a monumental logistical and technological achievement. Yet, despite these impressive figures, profitability remains elusive, and regulatory hurdles persist, highlighting the long-term, high-stakes nature of this unexpected venture. Another highly publicized and ultimately controversial other bet was Sidewalk Labs, launched in 2015. Their flagship project, Quayside in Toronto, aimed to build a smart city from the ground up, utilizing digital technology to improve urban living. Plans included dynamic streetscapes, autonomous vehicles, modular buildings, and ubiquitous sensors to optimize everything from traffic flow to waste management. The vision, as detailed by Fast Company, was a data-driven urban utopia. This wasn't merely about selling software, it was about reimagining physical infrastructure and societal interaction, a grand experiment in urban planning guided by data and algorithms, pushing Google far beyond its digital comfort zone into tangible, physical real estate development. However, Sidewalk Labs' ambitious vision quickly ran into significant headwinds, primarily concerning data privacy and public oversight. Critics, including former Ontario Privacy Commissioner and Cavoukian, raised alarms about the vast amounts of personal data that would be collected by pervasive sensors and how it would be used. The project became a flashpoint for broader debates about corporate power in urban development and digital surveillance. Despite revisions to their data governance plans, public trust eroded. In 2020, Sidewalk Labs announced it was ceasing operations on the Quayside project due to unprecedented economic uncertainty and public opposition, illustrating the challenges of translating digital innovation into the complex physical world. While many of Google's other bets were entirely new territory, its aggressive expansion of Google Cloud Platform, GCP, represented a powerful move into an already established, highly competitive enterprise market. Late to the game against Amazon Web Services, AWS, and Microsoft Azure, GCP was initially perceived as a distant third. However, under CEO Thomas Kurian, Google Cloud has seen significant, albeit expensive, growth. A report from Gartner highlighted GCP's rapid innovation in AI and machine learning services, attracting enterprises seeking cutting-edge capabilities. This strategic push to capture a larger share of the enterprise cloud market is critical for Google's long-term revenue diversification beyond advertising. Despite its late entry, Google Cloud has made substantial gains. Synergy Research Group reported that by Q4 2023, GCP held approximately 11% of the global cloud infrastructure services market, up from around 5% in 2017. While still behind AWS and Azure, its year-over-year revenue growth consistently outpaced its larger rivals, often exceeding 25 to 30%. However, this growth has come at a cost. Alphabet's financial reports indicate that Google Cloud continued to operate at a loss for many quarters, requiring significant investment in infrastructure and sales. This pursuit of market share, even at considerable expense, underscores Google's determination to establish itself as a major player in the enterprise technology landscape, a far cry from its consumer-centric beginnings. From prolonging human life to building self-driving cars and challenging established cloud giants, Google, through Alphabet, has systematically diversified its empire into unexpected territories. These ventures, often characterized by immense capital outlay and long gestation periods, signal a profound evolution from its search and advertising core. Some, like Waymo and Calico, are long-term bets on fundamental shifts in technology and society. Others, like Pixel and Google Cloud, are strategic plays to control more of the technology stack and diversify revenue. While not all have succeeded, as Sidewalk Labs illustrates, the consistent theme is an unrelenting pursuit of innovation across every conceivable sector. Google is no longer just a search engine, it is a sprawling conglomerate, continually reshaping its identity and pushing the boundaries of what a technology company can be.